What's going on, guys? This is Aaron from Departures Capital, and we're here with John Feneck, CEO of Feneck Consulting and Portfolio Manager in the mining sector. It's a pleasure to have you on, John. It's been a little while, so how are you doing?
Great, Aaron. Thanks. How was the rest of your summer?
Oh, it was great. I'm excited to be back to the grind. Hopefully this fall is going to be busy, but we'll see. So last time we spoke, we were chatting about the current state of the markets. Could you tell us a little bit, what you've been up to since we last spoke and everything that's going on right now?
Yeah. So handholding, it's been a rough couple of months. I think I've said on your show before, July and August are very slow months for mining, and that is when you can capture some really good opportunities. The last time on your show, we talked about one of those names, Forum Energy, which we'll get to in a little bit. But it's up 100% since our buy on your last show, and it has had very little news flow. It's simply got so cheap that the market stopped shorting it, the algos got off it, and it started to run with uranium doing better. So, I think you need to do it. You need to do your homework in times like July and August. That's what we've been doing. We've been doing a lot of extra work to try to set up trades that will carry us into 2024. We're feeling very good about how we're positioned right now. So, I would just encourage clients to hang in there. It's been a really tough run. We all know that. August of 2020 has been over 3 years now since the highs. But with that said, there's always opportunity out there.
Definitely. So we have some upcoming Fed meetings with more potential rate hikes on the horizon, although I think that's pretty crazy. So what's your take on all of this? And could you speak on the outlook for precious metals? Because that's what we normally come to you for.
Sure. So on the Fed side, we've been saying since March and June, the Kitco appearances in 2022, that the Fed would be more aggressive than people would expect, right? And that was a counterintuitive play, considering I have most of my money in gold and silver. I would have benefited from saying we see rate cuts, we see a pause. We weren't saying that, and we still aren't saying that yet, because the Fed's pretty adamant this summer during Powell's comments at the Fed meeting that we're going to see another two hikes, and we got one of those already, and we think the other one's coming probably November 1st if we're going to pick one of those three meetings, right? You've got one meeting September 20th, another November 1st, and then another one mid-December. When you look at the probabilities right now as we speak, very little probability of something happening September 20, but a 42% probability of a 25 basis point rate hike November 1st. So we think that, that is probably going to be the last one of the year. The market might throw a little party based on that because, that's how markets work, right? It's like tax loss season is pretty brutal for our sector, but in general, we could see another attempt at, all-time highs and things like the NASDAQ, or we could see the opposite of that, right? We could see because the S&P and the NASDAQ didn't make new highs, which I think is very significant, we could see September being the worst, historical month going back to the depression of 1929. You could see a pullback in the broad market. If the S&P breaks down to say 4,000, I think that would be a huge wake up call, that big round number to the market, and people would start getting a little bit more antsy, and would lead to a bump in our sector because look at gold, Aaron. I mean, to your point of asking where these things are trading, it's trading around 1918 right now an ounce. It broke 1900 since our last show. But we pointed out that it had run for over 4 months at 1900 an ounce consecutively. I mean, over 120 plus days like of over 1900 is very bullish. It's telling you that what I think it's saying is that the financial crisis that we saw in March really woke big money up, right? It's bigger people that are now interested in gold saying, I need a store of wealth, I need to protect what I've earned. And that is very bullish for our sector. Silver hasn't done nearly as well. It's around 22.90 a share, an ounce right now. But again, last fall at this time, almost at this time, silver broke 18 an ounce, right? So we're making what's called a higher low. We don't think we're going to revisit 1760 to 18 on silver. In fact, we don't even think we're going to break 20, which is a change in my positioning on your show, because I've been saying, pretty careful, be careful on silver all year, because, I just didn't see 30 plus an ounce this year. I still don't. I think that, that 26 level has been problematic now. for quite some time. If we break through 26 an ounce with some authority, though, it's going to be time to watch these silver juniors because some of them are just looking really juicy here.
For sure. So, you'll be speaking at Beaver Creek, the investment conference in September this month, with a heavy focus on energy transfer. Could you tell us a little bit more about that?
Yeah. So I think investors can look at this opportunity as we sit here today and say, wow, when you look back 2 years from now, 3 years from now, I could buy some of these juniors that are seriously thrown out the window that are going to be part of the future, right? I mean, if you look at a Barron's article on copper in January, it's pretty, front cover of the Barron's on the weekend. It basically said that copper miners are in trouble for the next 5 to 7 years. There's no new production on the horizon. And so when you look at, small copper names, mid-tier copper names, they're going to become, the next potential plays for some of these larger names like Freeport and the like. And so why not buy into that now? I mean, look at copper CPER. That's the tracker for the price of copper. It hasn't even gotten back to where January 1, launch price was. So it's actually down on the year, which is nuts because you and I both know copper is a major part of energy transition and battery metals, et cetera, right? So if you really believe in change and you believe in what you're reading about this EV revolution, then you have to be buying some of these juniors right now. I mean, I'm not suggesting you hold them for 7 to 10 years or anything like that, but I think you can hold them for 1 to 3 years and get some really outsized returns right now. So along those lines, when I think of nickel, I think of uh, a name I've mentioned on your show once or twice before, which is Stillwater, which is PGEZF. They're attached to a major in Montana. That's SBSW. If you look at SBSW's financials, Stillwater, their mine in Montana, is a big earner for them. And when you talk about proximity plays, right, Aaron, you've heard a lot about this in lithium over the last couple of years. Hey, my mine or my land package is 30 miles away from Patriot or whatever, right? That all makes sense. But this is connected. I mean, we're not talking like this is far or 30 to 50 miles away. It's literally right next door. So, I've talked to this there. They're very excited about their being in the ground. The news flow supports that. When you look at a 13-cent stock that literally got a 9.9% deal from Glencore in June, stock ran from 12 cents to 17 in a third, come back to 13. It's like a round trip. Like, did that investment not happen? Like, of course it did. It takes people a long time to, basically bring on a Glencore. It doesn't take a month or two. It's a year plus process to get to where they've gotten, right? So I think that's something that's pretty attractive. When I look at, speaking of proximity plays, when I look, what's happened in lithium, I see a lot of gold juniors kind of transitioning themselves into gold/lithium plays, right? So one that comes to mind is Champion. Champion Electric is changed their symbol since our last interview, and that's CHELF now. The former was GLDRF. Jonathan has done a great job of transitioning that company way before the pack. If you look at their September of 2022 news, they were talking up a transition away from just their 200% gold projects into lithium. And as we both know, the Canadian lithium story is super hot right now. They are very closely positioned to Patriot. Patriot's one of the best, commodity stocks out there for the last 5+ years. I think you have to take a look at what they're doing and go to their website, and there's some exciting stuff happening there. They have been hampered this summer, in fairness, by the fires and by weather. That is temporary, right? It's terrible, but it's not going to be something that's going to be an overhang on the stock for months to come. Another one that we just started to track is Brigadier Gold. Same thing, in Canada, in Quebec, two 100% owned projects, not as advanced in my opinion as CHELF, but led by a team that knows what they're doing. Their news flow has been consistent, which is great, and I have confidence in what they're doing. I would caution that if you're buying that in the States, the spread is quite wide, so you have to be careful with placing orders. But it's definitely worth a look, and I would encourage people to look at that website. And also, lastly, a name that we just started here about 2 months ago, Platinex, is starting to put out some news, but I think has some other news coming. They're a really interesting play because they're not just, something like gold and lithium, but they also have a royalty portfolio. They've got a number of different ways to unlock value. And that's one of the things that we've talked about in your show before. We like value. We're not looking for chasing stuff that's already run up, like a Patriot, for example. We've never owned it. We missed it.
Mhm.
It's cool. It's like I'm looking for plays like CHELF around Patriot so I can make a run myself and get it right, a second time around. But yeah, take a look at Platinex as well. I think they've got some interesting stuff there. Um, and one last one overseas, because I just came back from a European roadshow and met with a lot of investors there. Spark Energy is really interesting. I've mentioned it once before on your show. They have a huge land package in Brazil. And if you look at what Atlas is doing in Brazil, it's a NASDAQ lithium stock, not as probably as well followed as Patriot, but they have their own following, and this company is trading, ridiculously low, is the second largest landholder in Brazil. So I met with management there recently and have a lot of confidence in what they're doing.
So is there any other companies while we're on this topic that you're looking at right now? Any sector?
Okay. So going along the value theme, I mean, we haven't talked about this one in a while, but it's worth mentioning. Transition Metals, TNTMF in the States, they basically, have done a great job of building a capital structure without issuing a ton of options and warrants. And that's really hats off to Scott McLean and Greg Collins for doing a great job there. They've attracted Rick Rule to the stock. He owns a significant chunk of the stock. When you look at the capital structure, I think it's around 55 to 60 million shares out. So the stock, to my point, the point I'm trying to make is that you look back to say April, it's traded under 5 cents US only 4 different days. So that's one that's holding in quite nicely. And they own, interests in, 20 or so projects. So project generator model, Aaron, isn't super interesting to a lot of investors, but you also have to look a little deeper sometimes and understand that this company owns physical stock in other companies, like a Forum Energy, like a couple million shares of Forum, which has doubled in the last month, right? Yet transition stock hasn't moved at all. So it's like, what happens if Forum keeps going up? At some point, they may just monetize their position, and all of a sudden, your market cap goes up nicely. So they've done a capital raise this summer. That's behind them. They don't need money for a long time and into next year. And so I think highly of what they're doing. I would say one other, we talked about Forum, FDCFF. Again, go to their website, Forum Energy Metals, and just take a look at what they're doing over the last, couple months in Canada with their drill program. I think they put out a pretty decent press release recently, but the assays aren't really due until probably 4 to 6 weeks from now. So that's kind of what I'm really hoping to see is some progress there and on their targets. And then lastly, there's one that I'm meeting with for the first time tomorrow. So I'll give this to your listeners. Canadian Critical, which I've mentioned on a couple of shows before, RIINF. Ian Burzens is an exec who has been in the business a long time. I'm excited to meet him for the first time with COVID and everything. Sometimes you never even get to meet some of these
Yeah.
CEOs till now. But Ian is, has put out great news flow and has done everything right. It's just, again, the stock has been sitting there with a huge seller, around 3 cents US for what I think is about 3 weeks, 3 months now. So it's like when you see like a huge chunk of shares out there, it's very frustrating for an investor, right?
Mhm.
Because they see finally a seller gets extinguished and then he comes back the next day and you're like, how much selling is going on at this price? No one should be selling at this price because
Mhm.
it's just gotten crazy. Like I said on another show with Forum at 4 cents US, I called it insane. It's trading at 8.5 cents now, 8.5 cents US now. Some of the things get so stretched to the downside that investors just give up, right? And that's normal. But I think they need to partner with people like myself or other people in the industry to hold their hand through periods of time like this to say, look, I talked to Ian yesterday. There's nothing wrong. It's simply the perception. When you see a stock go from 6 cents to two
Mhm.
cents, you say, well, are these guys going bankrupt? It's a normal thought, right? But I would just encourage people to do some homework. Homework means read an annual report, read a 10Q, call the head of IR, call the CEO. It's extra time. I get it, but this is the time you want to be doing that.
So finally, any advice for investors looking to get into the market during these turbulent times? I know obviously it's risky, but it also presents a lot of opportunity. How do we navigate this scenario?
Well, we own very little in the broad market, like under 2%. And the stuff that we own would be larger cap and value, kind of names. Like I'm looking at Pfizer right now and some names that are just completely getting crushed with yield. But generally speaking, we are not touching the S&P. If you and I were just talking about this off camera, the August 31st holdings of SPY show a 25.8% weighting in the top 10 in technology. That is not the ETF, it's just the top 10. So when you're looking at your statement as a retirement shareholder, right? Like you're saying, oh, look, I mean, my S&P doing great this year, my QQQ, my NASDAQ doing great this year. Yeah, well, look under the hood to see what's driving performance, right? It's basically 7 stocks in technology that are outperforming. This has been a constant story that I don't want to beat a dead horse here. It's been out there for months, right? Everyone knows this is happening. So to get euphoric about the S&P at this juncture, to me, is a mistake. You want to be thinking outside the box. How are things going to do in a year from now, 2 years from now? Try to buy something now and hold it for a year plus, so you get that long-term capital gain. And so I would just say, whether it's us or someone else, call them and try to partner with them. For me, Aaron, like we always try to work with investors. Not everyone has a lot of money to start with, and we're cool with that. Like we just want to have dialogue with people to see what we can do to help, if anything, and if not, refer them off to someone else.
Definitely, John. Well, I appreciate all those updates. It was a pleasure, and I look forward to navigating these turbulent times with you, having you on again soon, because I'm sure we will. And best of luck this fall.
Thanks a lot, Aaron.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below, along with thoroughly reading our disclaimer. Thank you so much for watching, guys, and I look forward to seeing you in our next video.